show up. Let me now turn to Alessandro Rebucci, who many of you know. He was a colleague of ours not terribly long ago, but is now jumped ship and is a professor at Johns Hopkins. Alessandro, welcome back to the fund. We can't hear you, Alessandro.
Thank you, Prakash, for inviting me to comment on this extremely interesting paper. Next slide, please. In the interest of time, I will spare the summary of the paper. It was presented very clearly, and the point is very clear. There is an imbalance. So these tier 3 cities represent 70 to 80% of the housing stock, depending whether we look at quantities or values, and they host about 65% of the population, and they represent about 60% of economic activity. So there is a big gap that has built up over time between potential demand and potential supply. As the authors suggest, this imbalance poses serious risk to the growth forecast, not because housing is documented to be almost a third of the economy, to the fiscal sustainability of the provinces and the local government, and to financial stability, ultimately because of the high leverage of the developers. And this is very much reminiscent of the subprime crisis, which was a crisis affecting the low tail of the distribution in terms of the quality of the housing stock, and was also a crisis driven in part by the slow-moving supply that eventually continue to serve the market when demand has peaked. If anything, next slide, please. My comment is adding additional concern on demand side, and to organize idea here, I'm just taking a very simple valuation metric, Gordon dividend model, which tell us that the price multiple on the left-hand side, so the price of a property, so the value of the stock market relative to the dividend flow, so the rental income, in the long term, assuming that things stay constant, depend on the return on alternative asset here, R plus a rho, which can be thought as either a risk premium or the depreciation rate or the maintenance cost of these properties, and we subtract to that the rate of growth of the flow of services, the dividend, and the rental income. If we think about the whole economy, that is the growth of the economy. So as the author point out, the growth prospect here in general, regardless of housing own dynamics, are going down. We saw a chart where trend growth is declining. The risk premium and the maintenance cost of holding this very large stock of housing is going up. The risk premium is going up both domestically and internationally. Domestically because of the vulnerabilities and the cracks in the growth model. Internationally because of the geopolitical tension. The point that I would like to draw attention, which I think is very critical, is the role of the opportunity cost of investing in real estate. So much of the demand that historically accumulated on the household side is cash demand, partly driven by financial repression. So housing in China has long represented pretty much the only tradable asset on which household could save and could have market returns. So both financial liberalization, which is pretty advanced by now, and international liberalization point to the fact that alternative investment opportunities are becoming more and more available. Obviously, not obviously, but one could assume, we don't know the distribution of the portfolio composition by geographic distribution. So one has to presume that access to better financial products domestically or internationally is more prevalent in tier 1 and tier 2 cities. Is that everything okay? Can you hear me well?
Yeah. Can I please ask people who are not speaking to mute themselves? Yeah, go ahead, please, Alessandro.
So one can presume that access to better financial opportunity where to place the household saving domestically, internationally, are more concentrated in tier 1 and tier 2 cities. But over time, tier 3 population will also have access to this product. And these obviously point to a further drag on valuation, on top of that 20%, 15-20% that we have already seen. So if anything, in terms of price dynamic, I'm even more worried than the authors. And that has implications not so much for household, but for the developers that are highly leveraged, and in turn for the financial system. Next slide, please. Here you have a sense of how large, for example, portfolio flows are nowadays. Is the red line here on the left-hand side is dollar value. Portfolio flows at the end of 2021 are about a little bit more than $500 billion, so $648 billion. It's not humongous, but if you consider that official reserve, which are unanimously regarded as a very large stock, is a little bit more than 3 trillion, we're getting there. So this is here to come. And just to reinforce and give a specific example of how access to better alternative to housing is a big threat on the demand side of the economy. Next slide, please. I would like to conclude asking a couple of questions that came to my mind, for which I do not have an answer, but perhaps some of my colleagues or we have a few minutes for discussion. One is, the imbalance has been brewing for a long time. So why that is the case? Interpreting such a big trend as a policy mistakes, it strikes me as unsatisfactory. There must be a political economy distortion at work here. I know that there is a lot of work on the incentives that local planner administrators have relative to the way they execute policies. And clearly, it would be interesting to think harder about why do we have such a trend in the system that has gone on for a long time and now is coming to really a rupture point. The second question is, if we look at this from the perspective of market economy, the economy looks bound to a major crisis and collapse, because working off 30% excess supply just through price adjustment and market dynamics means a Japan-style massive and very persistent price decline. So as the author goes into thinking about policy lever, two important questions seems to me, given China capacity to plan and execute reform, is this an opportunity perhaps to reform the ecosystem at the central level? The ecosystem the policies that give access to essentially citizenship and a bunch of service and rights to migrant workers. The sharp decline that we saw in 2021 of the population, if I'm not mistaken, is likely related to migrant workers that went home in February 2020 for COVID and did not come back because the economy has now fully recovered. So reforming the ecosystem, giving incentive to workers to settle in this city is a way to create demand and at the same time addressing the social insurance safety net concern and problem associated with the ecosystem. Secondly, what can we do with this huge unused stock of residential housing? Is there a way to convert some of these and divert some of the infrastructure investment toward conversion of these housing stock from residential to what is needed for an aging population, which is presumably means retirement home, health facilities, and so on and so forth. So, for example, one of the reasons why I understand the leadership is very reluctant to change COVID policy is the fear that the health system is not equipped to handle a possible major outbreak. So building hospital, building retirement homes, building better schools, and addressing some of the needs of the urban development of this city is a way to support economy just on demand side. Only a price adjustment, I think it would be major carnage for the developers and would pose major threat to financial stability in China. Thank you.